Thanks. When I saw the list of presenters this evening, I thought a very disparate group of topics to cover, and resources are not something everybody invests in. But actually I saw a lot of parallels with the Ergomed, a portfolio looking for the big wins, but with an underlying business which is cash generative, and I think there were also some other parallels which I might pick up as I go forward. In another business I've run, I've used the bid platform as well, so there's a few questions people may have for me later. That says whatever it was supposed to say, and we'll move quickly on from it. Now, we're a very small business in terms of manpower. The board is the only retained members of the company. We do hire in additional people on an ad hoc basis when we need them, but essentially we are now a virtual company. We don't retain offices. We keep our overheads low, and we are a portfolio investment company, and therefore we're looking at our costs being in line with similar-sized investment companies elsewhere. We shouldn't be spending more than a few percent of the overheads, on overheads. So I came back in as executive chairman recently, having stepped down from another company on AIM, and the team have continued to grow the business over a number of years. I have been associated with Solo for about 6 years now. So we have a proven track record of getting involved in resource deals which are successful, and often success in resources is measured in terms of drilling. We are in oil and gas predominantly, and when the bit hits the reservoir and gas or oil flows up the wellbore, that's what you measure as success. And then if you can keep that flowing into commercial value, then that's the commercial success that ultimately you're looking for. We have a diverse portfolio. That is part of our system by design. We're getting involved in a number of projects across a range of geographies and a range of developments. Again, parallels with Ergomed there. We're not all in one part of the value chain. We get in early with what in our business is exploration, and we take some things through all the way to production. And I'll show you some examples of that. And we're looking for these big upside events. So, not all the things in the portfolio will work. And when I show you a map, a number of our ventures have not panned out as we expected. Others have. We're cash generative from our production business in Tanzania, and that pays the overheads and some. And we keep those overheads low. So here's the map of where we are currently involved geographically. Our biggest business is in Tanzania. We have a gas production business there. We have a gas development getting underway. And recently we've got involved in a new project which is non-combustible gas. It's helium. And helium was our hemostatics moment when our shareholders revolted. We didn't bring them along with that story. We've now stepped back. We have our investment, but we're not going to make further investments at this stage. And again, I heard some comments earlier about our share price is not in the right place where you want to be diluting for acquisitions, and that's a message that we have at this stage. So we actually took the unusual step of pulling an extraordinary general meeting over that event, and now we're going to hold a standard AGM in July. We make seed investments sometimes we can't step straight into something which is mature enough to drill. We made a seed investment in Nigeria, a very difficult place to make oil and gas investments, but a postcode that you want to be in if you're in the oil and gas scene. That's bubbling along in the background. It's called Burge Africa. It's an unlisted company where our partners have come together to invest in Nigeria if the opportunity arises. We're also a participant in the Weald Basin. Some of you who follow resource stocks will perhaps have heard of the new Kimmeridge discoveries that are being made, starting with Horse Hill, north of Gatwick, and have followed on at Brockham and most recently at Broadford Bridge. So this is a play which is evolving. There are clearly challenges to develop hydrocarbons in Surrey and Sussex, but it is being done, it has been done, and we're very keen on that. We made an investment also in Canada a number of years ago, which did not go as we expected. The operator there, by design, we don't operate our ventures, we take a small interest, and other people are therefore the operator, was unable to meet their commitments and delisted. So we still own the assets, but we don't have an operating company to go out in the field, produce the oil, and continue to drill that. So that's something we're looking to remedy. I'm going to look a little bit more at our principal investment in Tanzania. The Ruvuma Basin has a very significant amount of gas discovered in it. Most of it is offshore and by majors. A small amount of gas has been discovered onshore. Now, I say small, but of course it depends what your expectations are. We have discovered a pool of gas. We're a 25% interest in that with the operator Amanex, about 500 billion cubic feet, which offshore would not be very attractive, but onshore, close to infrastructure, and where we know the market is developing, 40% of Tanzanians don't have electricity in their home, and the government has committed to remedy that situation by 2025. The new gas economy that's taking off in Tanzania, we can play an active role in that. And so half a TCF of proven gas onshore is very significant. We had an appraisal of that earlier this year, which had a massive shift in our resources. Our share price responded to that. We then had our Helium moment, and our share price is retrenched. That's possibly good news if you're thinking of investing for the future in Solo, because our price is depressed at the moment. But the net asset value, remember, we're an investment company. We are not going to measure ourselves on the short-term horizon of share price by the day, though many of our shareholders do trade us as a day trading stock, and we have high liquidity as a result. But we're going to look at the net asset value. And the onshore gas discovery in Tanzania was recently rated at about $100 million net to our share risked, and we're trading at about $30 million. So there is a considerable arbitrage here to be had. So it takes a long time, and that's the other reason I keep this slide in here. We were an early mover onshore in Tanzania, and it has taken us somewhere between 7 and 10 years to reach value there. Our plan going forward at this stage is to do what the industry calls a farm out, get someone else to come in and pay your forward costs for a large part of your equity, or to sell out completely and to reinvest. Again, we're an investment company. We've made a good enough return on our initial investment, and we've invested about $13 million to get that $100 million valuation. We think it's about time we took some of that money off the table and put it back into new investments, or indeed potentially into a dividend. I've pretty well covered this. There is infrastructure. When we went into Tanzania, there was not. The Chinese funded and built a nearly 500-kilometer pipeline. It's a huge pipeline, 36 inches in diameter. It can carry about a BCF of gas a day. It's 1 billion cubic feet, so our trillion cubic feet will go in 3 years if you sent it all up there, if you filled that pipeline, but of course that's not what's going to happen. There are other discoveries being made and other fields being developed. And on Songa Songa Island, there is an existing production and a small satellite field called Kilowani, which we are a participant in. There's also the potential for liquids. We're talking a lot about gas here. We have seen condensate, which is the highest volatility of oil, as it were, but we are beginning to see some evidence of oil as well. This, for the more initiated, is taken from a seismic section. It shows those two wells, Notoria 1 and Notoria 2. We went up dip. We found a thicker sand, which is shown on the next slide. Again, this is a fairly technical view for those who want to take it away and understand what we're doing. But we went up dip. The sand is thicker. And we think we can go further up dip again, but that's not proven. So what we've done is proven around about half a TCF, the potential to go even further up dip. And if you go down dip here, you get offshore, and the industry has found some 100 TCF of gas. Now, to commercialize that, it has to be LNG. There's no local market. And that will take 5 to 20 years to commercialize. We can take this immediately to the pipeline, or indeed immediately to a CNG. We can compress it at site and sell it into the local market. So we're not looking at those kind of long horizons. And a development study should be underway shortly. I mentioned helium. There are quite a lot of slides in here about helium. We are still very excited about helium. We're very excited about our 10% interest in this Helium 1 company. We are the only publicly traded company that has invested in helium at this stage. Why is helium important? It is a growing requirement for medical imaging. There is only one way. The very particular properties of helium allow you to produce superconductors, and superconductors are a vital component of MRI machines, and that market alone is growing at 3% per annum. But also the supply side, and there are a lot of slides after this which I will skim through, but I'll say what's important on the supply side. About 40% of the helium in the world, but before you all think party balloons, that's about 4% of the world market. It's not, and in fact, some countries are talking about banning that for the reasons that I'm just going to cover, which is there is a supply crisis coming. 40% of helium comes from the US. A lot of it is sold from a US strategic reserve, which will be closed in 2021. They will stop selling to the world market in 2021. That'll be about 20% of world supply. The rest of helium currently comes from LNG schemes. It's a byproduct of LNG. As you reduce the temperature to create a liquefied natural gas to move around the world as a fungible commodity, you just need to take it a little bit lower, and helium, which is entrained in those hydrocarbon gases, can be extracted. 30% of the world's helium comes from Qatar, or at least it did 2 weeks ago. Now it doesn't. The Qataris have one of the large LNG schemes, and they have a tail-end processing plant which takes out helium. They then ship that helium in containers at low temperature across the land border into Saudi to reach a deep water port. Well, they don't anymore. So suddenly 30% of world helium has been taken off, and you can't store helium. Well, you can in certain circumstances, but Qatar isn't a place that they've set up those storage facilities, and the latency time of a container of helium, which has to be kept at about 4 degrees above absolute zero, which is a very low temperature, is about 6 weeks. So they can't store it, so they can't ship it, so what are they doing? They're venting it. What happens to helium in the atmosphere is it leaves the atmosphere and goes into outer space. So whilst it's a quite common gas, it's very rare to have it trapped. So what we're looking for in Tanzania is a natural helium which we can extract independent of hydrocarbons. And that's what we've got here as a project. So I've talked about this, very special properties. It's even a superfluid at 2 degrees above absolute zero, which means it actually flows without friction, which means it can flow through steel. Very unusual chemical helium. You find it trapped in the subsurface, generally with hydrocarbons, but if you have the hydrocarbons, then you're geared to the hydrocarbon market the same way the Qataris are, or the Algerians. What we're looking for is a unique set of circumstances where helium is trapped with nitrogen, another inert gas that we can simply vent to the atmosphere, and take out the helium and sell that into the market. I've talked a little bit about this. There are lots of other uses as well as cryogenics. It is used in lifting. There are new hybrid lifting vehicles being developed, but it's used in lots of things, electronics. Your computers, your mobile phones could not be manufactured if there was no helium. Interesting thought. Party balloons we can live without. Some of the growth, some of the pricing. I'm used to dealing with hydrocarbon gases, and partly I get very excited about helium because I see the price that it's trading for and the price dynamics. When I look at gas and I think of 100 TCF discovered offshore in East Africa, and there are Russian discoveries of hundreds of TCF, I think the price is going to stay pretty much where it is for as long as the world is willing to continue to burn hydrocarbons, which may not be for very long. I'm talking about there a price of maybe $6 a million standard cubic feet. Here, helium's selling at $200, and that's likely to rise. So that's why I'm excited about this. We do have to take our shareholders on a journey. For now, we're going to commercialize our gas, get some revenue from that, and then revisit the question of helium. But I think it is a very exciting prospect. And there are not too many places around the world where the very particular geology that you need to have helium trapped in the subsurface exists. They do in the North America, and we believe they do in Tanzania, where we have macro seeps with up to 10% helium. And our program over the next, it says through to 2020, is to de-risk that, drill it, and prove it up. So that's what I was going to say. I've got a few minutes left. We have a track record, as I've said, of delivering the right kind of wells for our investors. It has created a diverse portfolio, one we continue to want to diversify and spread. We think our principal areas of interest will continue to be Africa and Europe. We are in the UK. We've taken a look at some European opportunities. I had some conflicts of interest to European opportunities until recently when I stepped down from another company. We'll continue to look at Europe, and then Africa continues to be our main focus. We continue to generate cash, which pays the bills. So when we go to our investors for money, whether they like what we're investing in or not, at least we're not asking them to pay our salaries, which are anyway modest, and we keep our overheads low. As I say, virtual officing, small team, and the buying in of skills unique to things that we want to evaluate when we want to evaluate those. So we're not paying a large staff to generate ideas on a regular basis. We are debt-free. And in the next few months, this farm out or monetization event of our big gas discovery, we're looking to create that. Farm outs take a long time to do in the oil industry. The average time is about 12 months. So it does take a serious amount of effort to get the right commercial arrangements, whether you're selling or you're farming down, bringing in a new equity partner. but we're on that trail now. We expect to continue to de-risk the Helium projects. And for those who want to look closer to home, Horse Hill, as I mentioned, other discoveries being made of this Kimmeridge resource play. It's a naturally fractured limestone, doesn't need fracking. That's an important point to make. And it can be produced. We had a production rate from the Kimmeridge last year in excess of 1,000 barrels a day at Horse Hill. Those tests will now be repeated over a longer period of time, starting later this year. And we have a follow-on opportunity in the Isle of Wight as well, which we secured in the last UK licensing round. Keep an open mind. It's a stock that's certainly seen a depression of its share price at the moment and offers an opportunity, in our minds, certainly, to make an investment. Our annual general meeting is coming up in 3 weeks' time.